Hello, I'm Corey Pruitt, a Member Services Manager here at KCERA. Welcome back to our 6-part Lifecycle of a Member series. In parts 1 and 2, we followed our fictional members, Pat and Kelly, through enrollment, career changes, and even how divorce can affect a pension. Now, in part 3, we're going to focus on one way a member can increase their pension, purchasing prior service credit. We'll walk through what types of service are eligible to be purchased, like extra help, per diem, prior public service, and military time. How the process works, from the member's first estimate in the portal through final payment, and what this means for our members nearing retirement. Our goal is to make this complex topic clear and practical for both general and safety members.
Good morning. My name is Sherry Willard. I'm the Deputy Chief for the Member Services Division of KCERA. So today we will continue our educational journey in the life cycle of our hypothetical members, Pat and Kelly. As you may remember, Pat is our safety member with the Sheriff's Department and Kelly is our nurse with the hospital authority. Now, when a member retires, their pension is based on 4 factors. The tier that they're placed in, so whether they're general tier 1, 3% at 60, safety tier 2, safety tier 2 PEPRA, 2% at 55, which is really 2.62 at 55. Their age at retirement, so this is where getting older actually has its benefits, and their final average compensation, and their years of service credit. Now, there isn't much a member can do to enhance their pension, but simply to come to work and put in those hours. Now, they could try for promotion and potentially increase their final average compensation, and or continue to work until they reach that maximum age of that tier. But when it comes to the service credit, there's really not a whole lot they can do except for go to work, put in those hours, and then KCERA is going to take a contribution out of that paycheck, kind of like a quid pro quo. So they do the work, we take that contribution out of their paycheck, and we're going to give them that service credit in return for that biweekly. We call that the earned service. So there really isn't much they can do to increase that credit in order to enhance their pension. But there is, if they have eligible service to purchase, such as extra help, per diem time, or even military time. So today we will be presenting to you the world of purchasing service credit. We will discuss what the different types are, the steps a member must take, the process staff takes, and how we calculate it, and what all that entails, and the payment options. We will explain how all of this relates to Pat and Kelly. So before we jump into that, let's do a very quick recap of what we talked about last month. So we discussed divorce and how it impacts a member's pension. And we learned that while attempting to update or change his beneficiary, Pat got divorced. So we discussed how our legal staff reviews those divorce documents, call that the domestic relations order, call it the DRO. Pat's divorce, his former spouse was awarded a portion of a community property percentage because the pension is an asset and it's subject to community property. So his former spouse was awarded a community property portion of his pension. So without further ado, I will hand it over to Corey Pruitt, the Member Services Manager with our Finance Division.
Thank you, Sherry. All right, good morning, Mr. Chair, members of the board. My name is Corey Pruitt. I'm a Member Services Manager here at KCERA, and today I'll be presenting to you information on purchasing service. So, as you know, we've been following Pat and Kelly through their lives with KCERA here. Pat, as safety member, will be doing a military and academy service purchase, and then Kelly, who is a general member, will be doing a per diem service purchase. So let's talk about what can be purchased. We have quite a few different options of what can be purchased. We have the waiting period, which is the first pay period of permanent service before an employee becomes a member of KCERA. We have extra help, temporary, per diem service purchases. We have medical leave service purchases. We have prior public employment service purchases, such as military or other prior public employers. And then we also have redeposits. So if you used to be a member of KCERA, you were terminated, you came back into membership, you can redeposit those funds with KCERA with interest, and you you'll retain or you'll get back your tier you were once at. And then we also have layoffs, so you can purchase the time after being laid off, of course, with some stipulations. So there's also quite a few different ways you can hear about purchasing. We show up to the new employee orientation. We'll talk about general KCERA information, and then we'll also get into purchasing service. We have been handing out pamphlets to employers and departments to have on hand, so they can hand those pamphlets out to their employees as they see necessary. We have our website where you can find a ton of information on KCERA as well as purchases, inclusive of the forms you'll need to fill out to make these purchases. Word of mouth, of course, is very important. Hopefully, as employees are finding out that they can purchase service, they're telling their coworkers. And then finally, we've been doing podcasts. So we've been sitting down with different departments, discussing any general questions they have, inclusive of purchasing service. All right, so before KCERA can begin working on a purchase, there are some preliminary steps that members must do first. The first being, they must run an estimate in the member portal. So our IT department has built some great functionality in the member portal to allow members to go in there, select the different options of potential purchases that they have, and run cost estimates for those purchases. So it creates a lot of transparency between members and seeing what the cost could be for these purchases, also allowing them to kind of plan ahead for making these purchases. In the last 6 months, we've had approximately 800 purchase estimates run in the member portal. Of those 800 estimates run, we've received 125 actual purchase requests. So you can see a significant difference between the estimates being run and how many people can actually feel like they can make the purchase and then will submit that information to us. Of those 125 that were submitted, we've completed approximately 100. So that's an 80% fulfillment rate on these purchase requests, which is a great percent. So they'll submit that purchase estimate in the member portal. They'll fill out a purchase request form identifying what type of purchases they want to purchase, and then they'll also collect any substantive data if they're doing a prior public employment purchase. They'll need to reach out to that prior public employer. They'll have to use our certification forms, have that employer fill out the information that we require, such as service time, what type of service. So when we run the calculation in our administration software, we have all that accurate information. So they'll have to go back to their employer, get that certification, and then send it to us. So back to Pat and Kelly here. So Pat, for his substantive documents, he'll have to obtain that DD 214 form for his military service purchase. Kelly, on the other hand, attempted to run a purchase estimate in the member portal. Unfortunately, she is purchasing time from back in the 90s. Yes, we still get purchase requests from time back in the 90s. We don't have that per diem service in our administration software, so unfortunately, she's unable to run an estimate. Don't worry, we'll figure that out later on in this process, but she gives us a call. We say, don't worry about it, we're gonna waive that requirement for you. Go ahead and turn in your documents and we'll proceed. All right, so the members done all the preliminary work on their end. They've run the estimate in the member portal. They've collected all the documents. They've provided us all that information. Now we can do some preliminary work on our end. So we're going to review that purchase request form, make sure at a very high level, our member services technician will review the form, make sure it looks all accurate. They're going to receipt it into a purchase request log, and then they're also going to verify that a member portal estimate has been run. If one has not been run, they'll reach out to the member, they'll tell them about this requirement, and then if necessary, they'll help walk them through that process of running that estimate. Now, the preliminary work has been done on both ends, we can start actually working the purchase. So the member services analyst will pull that purchase off the purchase request log in the first in, first out method. They'll do now an in-depth review of that purchase request. They'll start identifying specific requests that are occurring, extra help, medical leave, prior public service, what type of substantive evidence they'll have to obtain from either the employee or other areas to support those purchase times. And then, of course, they will turn to the information we have in our pension administration software. They'll do an in-depth analysis of what tier the member is at, what employer the member works at, what the entry date of the member was, what age they were when they entered. All of these factors will impact the calculation when we run it for this purchase, so they'll be reviewing all of this information. And then finally, they'll also review the period being purchased. So in cases like extra help, we have all of that pay period data in our administration software. So we'll be reviewing the pensionable earnings, we'll be reviewing actual hours worked, we'll be reviewing special pays, we'll be reviewing retro pays, basically all of the payroll data, because that will impact the calculation when we run it and will impact the cost of this purchase. Back to Kelly's problem, she ran into an issue. We don't have the per diem service in our pension administration software. So we're gonna have to go outside of our pension administration software to basically a very old library of payroll records. It's basically thousands of PDF pages, and we're gonna have to extract that payroll data off of those PDF pages. We're gonna drop it into an Excel file, and this is pensionable earnings, special pays, basically all the payroll data I kind of just discussed. They'll drop all of that information on an Excel. They'll send it to a senior analyst for review, and then our IT department will be able to take that Excel spreadsheet and upload that payroll data directly into our pension administration system. All right, let's talk about a couple more unique scenarios here. So some unique scenarios could be a prior public employer and determining whether or not that prior public employer is actually eligible for purchases. So we can get a request for any type of prior public employer, but we have to make the determination if it's within our regulations to allow that prior public employer purchase. We do this hand in hand with legal. Our legal department will provide significant guidance and help us understand whether or not that prior employer is allowed to have this purchase. Additional problems we run into is prior public employers providing us certification that does not have all the data we'll need to properly run the calculation. So there could be a lot of back and forth between us, the member, and that prior public employer to make sure we get all that information we need. And then finally, basically any type of mix of extra help service purchases, redeposits, medical leaves. If people are getting 5 purchases done on one request form, it increases the complexity. We have to be very careful about how we order these purchases, because a redeposit can impact what type of cost and service will be allocated to the extra help purchases. So we have to make sure we understand and we counsel the member appropriately on which order they want to do these purchases in, because it will impact the cost and it will impact what type of service they're rewarded for the purchase. We're talking about redeposits here. So let's talk about some of the potential impacts of redeposits. When you're going from a PEPRA tier to a legacy tier 1, of course you're gonna see the upside on the pension, where you'll see that increase in pension. And a lot of people see that, and a lot of people see the redeposit as purely positive. But there are downsides. You'll see an immediate impact if you're going from a PEPRA tier to a legacy tier 1. You'll see maybe your employee contribution rate go from 6% to 12%. You'll lose that 6% premium pay. You'll lose that 6% deferred compensation match. So all of these immediate downside impacts need to be counseled to the members so they can make the correct decision for themselves. And maybe down the road that increase in pension is nice, but maybe they can't handle these immediate downside impacts. So counseling the member, making sure they understand what this redeposit and how it will impact them.
I actually have a question, I guess, with that.
Oh, yeah.
So is it just the loss of the premium pay going forward, or is there any kind of obligation the member has for the time that they were contributing before the purchase?
It will just be once they complete that redeposit, they'll lose that 6% premium pay on a go-forward basis. So no retro impacts.
Okay.
All right, so let's turn back to working this purchase. So at this point, we have gathered all the data. We've reviewed the pension administration system. We're comfortable with all the information we have in there. Now we can go ahead and run that calculation. So the calculation, let's say for an extra help purchase, is going to be broken down by pay period. It will be broken down by actual hours, pensionable earnings, the contribution rate being applied, the interest factor being applied, and we're going to, of course, want to validate all this information. Some of the things we have to be very careful about is what type of MOUs are in effect for these purchases. If we're looking at the calculation and we see 1/3 of the rate we expected or 1/6 of the contribution rate we expected, we should be able to identify the MOU that's changing that contribution rate from what our expectations are. So we have to be very conscientious, or Maggie, as she said, use conscientious. So we have to be very conscientious of the MOUs that are impacting that calculation and the contribution rate. And then finally, the interest factor. So the interest factor is applied for basically the earnings KCERA could have had between when the member was able to make the purchase and when the member did make the purchase. And this interest factor could double or triple the base cost of these purchases. So we have to validate that interest factor that's being applied to the calculation. The final slide of working the purchase here. So the analyst has reviewed all the documents, reviewed the administration system, reviewed the calculation. Now they're going to kick it to the senior analyst to review. The senior analyst is kind of going to do the same steps, same process, look at the same data, and see if they come to the same conclusions the analyst did. If so, they'll give the A-OK, and then we can proceed to the next steps of the process. So the analyst will generate a letter and an election form. They'll upload that information to the member portal, and they'll send those documents out to the member. This letter and election form will contain information regarding the different payment methods. It'll contain the cost of the purchase and the service being purchased. We do offer quite a few different options to pay for it. We do vacation payouts, deferred compensation rollovers, lump sum payments, active payroll deductions. So this letter and election form will contain very detailed instructions on how to execute all those different payment types. All right, let's jump back to Pat here. So Pat received the election form, received the letter, and he looks at the price, and it's $40,000, $50,000, $60,000. Some of these purchases go up to $60,000, and he wants to know how we got to that amount. And we understand that $60,000 is a lot of money. We're more than happy to share that information with members if they ask. We're more than happy to tell them how we got to it. Maybe it is that interest factor that's tripling the base cost. There could be a variety of other reasons as well, but it helps create transparency and build trust with these members when we're able to share that type of information with them. Additionally, he had some questions regarding payment options. Not only do we have a variety of payment options, but we do basically a mix and match ability with these payment options. So you want to do a lump sum payoff and active payroll deductions, that's fine. If you want to do a vacation payout and deferred comp rollover, that's fine. So basically at this point, we're calling the member, counseling them, discussing the best options so they can execute what's best for them. You have a question?
I just have a comment when it's a good time.
Whenever, shoot.
So, and it has to do with using your deferred comp to pay for your time buyback. Jordan, I would actually love for you to chime in on this. The way I see it, correct me if I'm wrong, you're basically getting, if you discount it, if you take life expectancy and you take the cash flows, you're buying that time back at what it costs at the rate of return that KCERA has. So if you were to, number of years, how old you are, and then life expectancy, and then do the cash flow model, that's how you guys actually come up with it, correct?
Trustee Kratt, yes, that is my understanding. There is an interest factor that gets applied, and that's why the cost increases over time.
So let's say that is 7%. That's probably safe to assume that. So we're telling people that they can take their money. I just wish there was a little counseling with this to explain this. What I'm actually trying to say, if I'm right, is we're counseling people to say you can take your deferred comp that makes, I'm going to say probably more than 7%, to give it to buy back your time, which there's no guarantee, because if you die, let's say you don't have a family and you die, you will lose that money, or you'll lose a lot of that money that you have used to pay for that time. So I guess a lot of guys are really like, I'm gonna pull the money out of deferred comp. And when I think about it, I go, I don't think that's a good move, because I think you're putting it in an investment vehicle that is gonna return you less than your deferred comp. At the same time, there are consequences. The money in deferred comp is always gonna be yours. If you die, you can hand it down, where a pension has strings attached to it if you die, and payout models that change. So I know we tell everyone, we can use our deferred comp, but I don't see that as, and some guys like to do it. I get it. If you have $500,000 in there and you want to buy a couple years, maybe that's not such a bad idea. But for the guy that has $50,000 in his deferred comp and he takes it all, or a chunk of it, a majority of it, and buys time back with it, as time has gone on, I have started to think that is not that great of an investment.
So Trustee Kratt, I understand and I agree with what you're saying, but two other factors to consider. Number one, when they purchase time, they are only paying the employee portion. There's an employer portion that is not being fully recognized that technically becomes part of the unfunded liability. So they're actually, I'm not saying they're doubling their money, but there's another factor. That pension is worth more than just the cash that is being put on the table at that point. But you're right, there are other factors to consider, and it's very individualized, and it's all part of the counseling in terms of what are the factors that you should be considering when you think about doing a purchase. And it's very individualized. Two people might have exact same situation and arrive at different conclusions because it's based on what they want to do.
When somebody buys that time back though, do you guys counsel them a little bit and say, hey, so here are your options? And my next question is the time, but here are your options, but let's talk about pros and cons of using your deferred comp to buy back 5 years of Fed time, $100,000. And I'm curious if you guys kind of do like a deep layer of like, if you die tomorrow, you know, your money that you bought those 5 years, it's gonna change, versus the money that stays in your deferred comp will always be yours, can be handed down. How deep do you guys explain all that?
I'll defer to staff on that portion in terms of just how deep you go.
From my understanding, we do not go that deep. You know, we do very surface level. It's up to the members to kind of make those decisions, and we can only provide them the information. You know, we don't have very high investment level staff giving the counseling on these. We have, you know, member service analysts, so we wouldn't put that necessarily on them to provide that type of counseling, I believe.
I'm not saying it's a bad deal, so don't let me, I think it's great that you offer that. I'm a little shocked when I see people, they're like, I got $50,000, I'm gonna buy my time back. And I'm like,
Well, it depends on circumstance.
exactly.
Because if you have a 60% continuance, basically you're getting you're buying an annuity at the COLA that's good.
Yeah.
At the COLA, but the contribution into it is the employer's putting an amount of money for the time you're buying back too. So they're a combination of factors. But there you can have so many variations of situations for individuals. And like you say, for a single person, and they are not going to they're going to get 100% while they're alive. And but that happens all the time anyway if somebody dies early, you know, even if they don't have to buy any. But I'd like to hear something from the deferred comp people over here.
Sorry, Jordan, I don't mean to throw you under the bus, but I would like to hear it because I have a lot of people that approach me.
But it's better to have
a lot.
I know, and it's better to have people have options and then tell them that better information, better decisions, and they need to understand the mechanics of it.
So I know, like, you know, when we do our self-directed brokerage, we can only take a percentage of our deferred comp, 25%. So I don't know if I'm getting bad information, like people can wipe their deferred comp out, pull it all out and use it to buy back time, or is there a percentage that is allowed to be drawn down?
No, there's no restriction there on how much deferred comp you can use to buy back your time. And, you know, deferred comp is one option to buy back your time. I think it's probably the most commonly used option because in general, Either people don't have that much cash laying around in their savings or checking account, so they don't have that option. And they don't necessarily want to reduce their current income by taking, wage, taking it out of your paycheck. So the only way to not impact them currently would be taking their deferred comp.
What are the
I would argue that from a sort of probability standpoint, the chances of dying early and not being able to use your pension are probably less than the chances of relying on the market to provide you your income in retirement, which if you are in deferred comp, you're relying on the market versus an annuity, a fixed income. And the amount of, or the level of return that somebody can generate in deferred comp completely varies depending on how they want to invest their money. Obviously, with KCERA, the participant doesn't have a choice. It is done for them by professionals. In deferred comp, it is up to the participant, and there are some very savvy investors, such as yourself, that probably make a return that far exceeds the 7% that KCCERA does. But I would say, it is completely dependent on the participant and what their knowledge, risk appetite, all of that is in deferred comp. So, I would argue in general, it is a good idea because, or it's a good option because, again, I think the probability of dying early is much less than the probability of relying on the markets.
Mr. Chairman, Trustee Crowder, I was just going to clarify something on the purchase. When the member is purchasing that money is not lost if they die. That's an employee contribution, so
they
they
would get
can
it back
pass
with
that
interest.
on with interest. If they were to pass away right after they
Yeah.
purchase, and we pay the beneficiary contributions of interest, they can pass that on.
So that's good to know because, like I said, I have in the last couple months I've had a number of mostly single mid 40s to early 50 into the career professionals that are like, I'm getting ready to punch out in a couple years and I want to buy my time. And so they're looking at, they can't do the cash, and deferred comp is an option. The other thing is, how did we arrive at a maximum of 5 years for a payment plan? Is that what it is? A maximum of 5, isn't it?
It depends on the purchase type. Certain, like an extra help purchase, will be based on the extra help years of service that you're purchasing. So it depends on the purchase type.
What is the maximum that you can allow someone to buy time?
I don't have that information off the top of my head. Sorry.
I think it's 5 years. Do you know, Jennifer, why that is?
I don't know offhand.
Could we ever look at something like if you were under 40 or something, like letting it go to 10 years?
But the problem, the potential, I think, Corey, if he hasn't gone into it, it's part of this, he was talking about interest. So the longer you wait, the more expensive that purchase is.
Right.
And if you pay it over installments, it's even more expensive, right? Because there's interest through installments, like a mortgage. And so the best thing to do is to purchase it as soon as possible. Because
I don't disagree with you. I don't agree. Yeah, purchase it the day you get hired, but everyone's trying to put groceries on the table, and it's tough to tell a 24-year-old, hey, I need you to pay $150 of your paycheck while your time back, and they just don't do it. And then they hit 45 and they're like, I'm getting to the end of my career.
And that's when they really need to weigh the cost of this versus what I'm going to get from that. And I do think benefits staff does talk to them about, obviously we don't tell them what to do, but we educate them on it's going to cost you this much, and this is how much your benefit will change as a result of this purchase. And then they can weigh, is it worth it to even make this purchase now, this late in the game, when it's going to cost me this much money? And the result will be X increase.
And it's unusual for people in their 20s and 30s to start thinking about buying back time and stuff. It's usually a later career decision. And then you have, it's when you always have that situation, you have to they have options to make, and they have to make the final decision. And you can't, you can understand getting things complicated and cash flows and everything else, but you start buzzing this stuff by the average person, they just go. And then they hear somebody else tell them something, and you have to go through that barrier so they understand the real facts. And that's a lot of there's problems there, but it's just the counseling that you can do and the questions they ask,
I'm just curious, Jennifer, if you have some time, if you could look at how they arrived at the 5-year. I agree with you although as the assumption rate drops, a longer term would be easier because you're using a lower interest rate. So not that I'm saying we're getting ready to drop our interest rate to 5% or anything, but I'm just saying we have dropped it from 7.75 to 7 since I've been here. But if you would just look at it, I'm just curious. A number of people are like, man, I would do it right now if it would be 10 years. And I understand it's gonna be more interest. It's 7% interest. So it's gonna cost them more. But if you have time.
Trustee Kratt, two comments. One, I think it's worthwhile to mention on slide 8, it shows statutory references for every one of these items. So none of these benefits are discretionary on our part. We didn't choose these. Our plan sponsors chose to allow these for our members. Another thing when it comes to the time value of money. So I agree with what you're saying. Personally, staff, at least this staff, not a big fan of installment plans. Installment plans cost a lot of money for the member over the long term. If I was going to counsel somebody, or if it was me, I would say, well, instead of paying on an installment plan, I tell people save up through deferred comp. That way you're earning interest on the money while you're saving it. You preserve your option to be able to buy it later.
I agree with you. That's especially if you're earning more than 7%.
Trustee Cat, in regards to repayment terms, you just mentioned the guy's at 45, he's at the end of his career. We can't extend it out 10 years because he's planning on retiring in 4. So that's also a consideration. Then we take into account how long did they earn that service, and would have paid over that time frame, and kind of make it relative to that.
I do have a few like 40, 41-year-olds are like, I'm putting 10 more in. And they're like, I would like to buy it, but they're like, maybe I'll buy half of it now and then half in another 5 years. And I'm like, well, it's going to get expensive too. And as you promote, your salary goes up. And so, but
what are you telling these people?
I'm sorry, Phil?
What are you telling these people?
I'd tell them to call Phil Franey or Dominic Brown.
No, actually, if you refer them to that, but you can ask. I would say to give them information that they might want to ask. But as to and some of the things they will ask, because I know I've worked in that too. They will ask will be not possible. Like if they I want to do it here or here, and say, okay, let's break it down. Give them a couple of simple options. Say, this is the easiest way to do it, because you're going to be paying that money as if it were on deposit if you're buying back time. So the time value of money. But don't try to get too deep in the woods with these people on the time value of money and things like that. And then a lot of them in deferred comp, they just use the stable value fund and that's it. You know what I mean? So you have all these different variations and all these different machinations or whatever on these things.
Yeah, they have to understand that if they carry it out that far, you can't leave until you pay it off. So, that's one of the big things. So it locks you in, or you got to come up with the cash and just pay it off.
Well, there's so many things variables that could happen out there. They could die, they could have a serious illness or something like that. There are all sorts of things that could happen. So each it's individual. Give them the best information they can have, and hopefully they'll make a decision that's for their betterment.
Yeah.
All things considered at that time.
If you just have a moment, Jennifer, how they came up with the 5.
But we don't even know if it's exactly 5 either.
I'm pretty sure it's 5.
I got a very basic question.
Yes.
I didn't even know about that you could do this. So it's a non-taxable event going from your deferred comp to. That's correct. Okay.
Trustee Couch, that's correct. Pre-tax to pre-tax.
That's another consideration too. Jordan?
I was just curious with all this discussion, in general, like percentage-wise, people that buy back service, is the majority does use deferred comp, or is it a pretty even mix? I had an assumption, but I don't know.
I would actually say it's a pretty even mix. We see a lot of active payroll deductions. We see a lot of just straight lump sum payments. It is really just a good mix of all the options.
Yeah.
And like I said, you can mix multiple options. You can do deferred comp rollovers and active payroll deductions. So you're really not limited.
It's nice to provide them with options that they can at least manage their situation a little bit better, especially when they're looking toward the future in retirement.
I have one other complicated thing, and I'm sorry, Jennifer. This is a good one though. Your last pay period, you can cash your vacation out, and you can also roll that into deferred comp, and you can double up if you're in your last 3 years. So if that's the case, I think it's 23.5. You could put 40. If you were like senior management, you could put $47,000 tax deferred into your deferred comp on your last pay stub. Could you then immediately turn around and buy back your time even though you are imminently going to retire? That's deep. I'm sorry.
Yeah, well, I think the
That's
timing,
a way to move some money.
The timing probably matters, right? In terms of, because if it's a terminal pay, those are the payouts when you are done, and you can't make purchases if you're done. You have to be active. So that's where I think that would be the differentiator. You can't be done and purchase. You have to still be active to purchase, and you have to complete that purchase before you leave. And if they're paying you out, then that means you've already left. So I would say that's probably enough.
So Corey, how are we coming along here?
Very
Trustee
good.
Gonzalez has,
Yeah. So,
Mr. Chairman, go ahead.
One question. So he gave a complicated one. I'll do a simple one. So when it comes to the retirement, the purchase estimator that's on the member portal. So I think Corey, you had mentioned that they'll see the number and then they'll call and say, how do we get to this number? Is it not broken down? Is it just a lump sum number and it's not shown like, hey, this is how much your service credit was and this is how much like the interest rate is? Like, does it show any of that information on the portal?
Sure.
Yes, in the estimator, it will have the amount of service, it will show the total amount, the payment options, and then it actually will summarize it, and it'll even do a break-even calculation, kind of what Jennifer was talking about, telling them this is how long it would take you to recoup and how much it's going to increase the pension.
I appreciate the questions. Yeah, if you have some employees that want some more information, tell them to give us a call. I'm more than happy to talk with them. Maybe we can share some of that info. Okay, so receiving payments. So at this point, the member has completed their election form. They've chosen their payment methods. The combination of those payment methods meeting the total cost, our member services analyst is going to review, make sure it all aggregates to the total cost. They will receipt any cash or checks paid to us into our pension administration software. And then, if necessary, they will initiate those active payroll deductions. They'll send them out to the employer. The employer will enact them, and then we'll receipt payments against the purchases on a biweekly basis. Employer payments. In some instances, such as extra help purchases and waiting period purchases, the employer must also kick in contributions for these purchases. If so, the employer's calculation will be reviewed in tandem with the employee's calculation, so we'll be reviewing the employer contribution rates as well. Note that the employer contributions are not impacted by interest factors, so the employer does not bear the burden of an employee waiting 15, 20 years to make a purchase. We will generate an invoice, we will send it out to the employer, and then of course, once they pay us, we'll receipt those payments into our pension administration software as well. This was the case for Kelly. So Kelly did that per diem service purchase. She works with Kern Medical. We generated that invoice, sent it out to Kern Medical. We did review the calculation and we receipted their payment once they paid it to KCERA. Real quickly, I do want to talk about KCERA's legal department. They provide significant guidance to KCERA staff in the form of signed memorandums regarding a lot of the questions that we're asking regarding the regulations that support these purchases, such as what type of special pays should be included in the calculations, whether unpaid maternity leave is purchasable, how to properly bill employers for their portion of the contributions. So they were able to determine that interest factor should not be applied to the employer contributions. And then finally, if certain prior public employers are eligible for purchases, we'll reach out to legal. They'll help us make that determination. As an accountant at heart, I had to throw in an accounting slide here. Even though we don't talk about the accounting processes in this presentation, every time receivables are open, every time cash is changing hands, every time deposits are being made, we're making sure that everything is recorded appropriately, our bank accounts are reconciled, the correct reserve accounts are being hit, and then of course we're presenting all that information out to you in the ACFR as well as those monthly reports. So some final takeaways. Members should purchase time early. When that interest factor doubles or triples the cost of a purchase, that's no fun for anyone. Number 2, members can run estimates in the member portal. This has increased transparency and increased trust and allow members to plan their purchases out ahead of time. And then finally, we do an in-depth analysis and review of everything. We do supporting documents review, we do pension administration system review, we do calculation review. And in tandem with legal, we make sure that these things are executed appropriately and accurately the first time. Before we get to questions, I do want to say a thank you to the board. It's with your support and understanding and willingness to provide us the resources and staff needed to execute these purchases accurately, timely, and effectively. Building that information into our member portal, all that requires additional resources, and you have helped us with that. So thank you very much, and if you guys have any questions, that's the end of my presentation.
Okay, Corey, very good job. And by the way, is there some periodic information sent out to the employees concerning the ability to at least remind them every once in a while that if they have public service, they may be eligible to buy back time that they don't have credit for, like through our public, what we have, the gentleman provides information to the membership concerning the aspect of this. And as Rick mentioned, sometimes these people, and many of them do, when they get late into their career, they say, oh wow, I might want to buy back some time. Then they have to research and go through the process, is maybe to periodically remind them. We have a publication too. I think that you work with the rest of the staff on maybe sending reminders out to the membership periodically. Not a big, I know we probably have something on the website too in the matter of buying back time too, but just to, sometimes they need an email every once in a while, some type of reminder to there is a program available that you can buy back time, things like that.
Yeah, I would definitely say Jeremy here has created some great pamphlets that we have provided to employers, to departments to keep on hand for members, as well as the podcast we've been doing as well with departments. But I think you have a great idea there to periodically remind our employees of this option.
How about, can you buy time? Would KCERA allow you to buy time back the pay period before you retire? Is there
if you could complete it, but see, staff has to have time to.
Yeah.
All of the things that Corey brought up, like what if we didn't have the information from the other system, and then it.
Because if you have the money in your deferred comp and you're like, I'm punching out and I have the money in my deferred comp, but I'll replace it with my vacation time, and you did it the pay period before you left, one, maybe even two, it wouldn't matter if you already had it in there. And you just replaced it when you left with your vacation. You guys would accept it a couple pay periods before you retired?
In theory, if everything.
Yeah, I would say the concern is you're not the only person requesting this service purchase, right? There could be 30 people, there could be 15 people in front of you. Obviously, we try to keep them as current as possible, but it's hard to prioritize. We try not to place a higher priority on someone just because they've decided to wait until the end to make a purchase. So just keeping that in mind, it does get risky with the processing time.
Are you still having a little bit of difficulty with people with Fed time finding the from the OPM, from office personnel, finding their records? Is that kind of gone away since the older group with all the Katrina records missing and all that?
Yeah, I haven't run into any issues regarding that. And then really quickly, I do want to touch on that. Sherry did point out that we do include some of the purchase options on the annual statement that we send out to members.
Very well. Good. That's
maybe-
very informative. Yes.
Yeah, maybe annual isn't often enough.
Right.
I was just going to add that deferred comp also, whenever we give presentations or anything, purchase of service credit is generally a topic, so we discuss it. So anybody that is in any of the deferred comp sessions or seminars or anything, they'll generally get information about it as well.
Right.
Mr. Chairman, I just want to answer Trustee Kratt's question, thanks to the quick work of Kristen. That the 5-year, the maximum 5-year payment period is statutory. That relates only to PPS, prior public service from other agencies, and military time. For every statute that allows for a certain purchase, it's different. Like for the extra help, it's not to exceed the length of the time that you're purchasing. So the 5-year one specifically, though, is for PPS and for military, and that's all statutory. And all of the statutes set forth the time period, purchase time period. So it wouldn't be something up to staff discretion. Welcome.
Thank you very much.
And then I had a comment as well, talking a little bit about like notifying the members. So if we're talking about including like an AI chatbot, like at the website, right? Like I know sometimes when I'll visit a website, a little chatbot will pop up. It's like, hey, how can I help you? Like maybe you can add like a line of some of the most common things that typically people don't think about, but does have a great impact on their retirement. So it could be like, hey, how can I help you? Like, are you here? Like, just so you know, some frequent topics are divorce, public or prior purchase services or something like that. Just a thought to include, like if we're including a chatbot on our site.
Yeah, and since everyone else is commenting,
We've all been looking at you like, where's
Yeah.
Dustin?
well, and it is, I'm glad that we are putting it out, but I think, yes, more education. 25 years ago, when I was a young Corps deputy with crippling debt, right out of the Marine Corps, because I spent it all on beer and whatever.
Tattoos.
Tattoos, yeah.
You just wasted the rest.
Correct. Even if I would have taken out a small interest or loan, from a credit union, that would have made the difference, where I could have bought that time back, opposed to what I looked at recently, what it was to buy it back. I was like, oh, never mind. I'll just work an extra 4 years. So yes, I think it is important at the beginning when we do, the employee orientation, but then with KCERA backing it up on how that's important. Hopefully, someone that is not as thick-headed as I was, that wanted to still hold on to that money that I would have spent on that loan, seeing the forest, not the trees. But thank you for your presentation. I appreciate it.
All right, thank you for your time.
That concludes this episode of KCERA's Life Cycle of a Member video series. Make sure to catch the next episode linked below. On behalf of KCERA, thanks for watching.